Hi and welcome to the Dow Market View for Tuesday the 30th of September 2014. And just looking at the pre-market here, we can see the market shaking out an hour before the market actually opened, and we can see the market finding support there at the 16,950 there. So when the market opened, we saw the market attempting to move lower, and this is a very interesting price bar because we see it coming off the lows with an increase in volume, and then we get a professional buying bar coming into the market, closing back above the 16,950, also the big round number there. So the market starts to move higher. We see the buying continue to drive prices through the previous day's low, and some selling coming back into the market. This then picked up with more buying, and then the market seeing both the selling and buying disappear for the time being, and prices attempt to move higher. Now, those that were sellers in the pre-market session, which is traded quite a bit before the open on the electronic market, if they were short, this is the place where you see them being taken out, because we see some selling coming back into the market there, and then the buying, and it's this buying around this area where they are jumping out of the market. So the markets move lower, and then it is turned around once more. So we see in the buying here at this level, this will be not only new buying coming into the market to try and support it, but anybody that was short, if they were short, you have to buy back. So the buying that you see is the shorts being taken out, or them voluntarily closing out their positions there. So the selling comes in there, we get a signal as well, but the selling doesn't materialize, and the buying comes in, absorption, and also the shorts being taken out, and we see the market free to move higher on low volume there. There's more resistance as the market starts to move higher with a bit more selling. Again, this disappears, and the market free to move higher. Now, there's a pattern here. If you've not spotted it, this bar here and this bar here are moving the market up on low volume. And again, we have some selling coming into the market as the market passes through the psychological level and the major support level of 17,000. And once through this area, the market is then free to move higher to 17,050 and up to the daily pivot. We see the market moving back down to the 17,050, back to the pivot, and then all the way back down until the market goes through the sort of the lunchtime bit. We've got another two potential sells there, followed by another one there, a third one. The market attempts to come back above the 17,050, and this is where it gets interesting as well, because late on in the session we see some buying pressure coming into the market. And buying pressure is simply the price, or the range of this bar is less than the previous bar, but the bar is greater in range. So it tells me that somebody's been absorbing the selling that was in the market. It's at that psychological 17,000, and the market reverses and moves back to the upside. There's a bit of selling around here, but again, we're free to move the market up past the daily pivot there, and then a bit of buying as the market moves through there, and then of course everybody bailing out just before the close there. And the reason I'm explaining all of this and going through each individual bar is to show you how you can actually read what's going on in the market, especially with these psychological levels. These are very important in the Dow. The Dow likes to trade to these big round numbers, and you can see here, once we, again, just to sort of impress upon you really the importance of looking in the pre-market. You see the market's been marked down, and then as soon as it's brought back above here, there's no reason why we can't trade these sorts of bars, you see, because the market's come back above the psychological level. We've had the shakeout in the background. The market is a buyer's market longer term. It's a bull market, and then we see the market moving higher. We've got resistance here, the market coming back through lunch, and then importantly here we've got this selling in the background down to the psychological 17,000 again. We've got the buying pressure in, the reversal, and then the move back to the upside as well. And like I say, as we go through the next several months, I'll be doing a lot more in-depth videos about this, and also recording some in real time as well, and showing you how to read the markets in real time, so you won't have to rely on just the automated signals. You'll be able to read it fluently and then also trade it as well. And there's a lot more to come as far as this is concerned. So disappointing day as far as generating the signals is concerned, but I've always said I'd rather have no signal than a losing signal. So again, it's just a case of just one of those days yesterday. There was plenty of movement in the market, but not the right signals or any fill signals for us. In the daily charts, we've got the market testing yesterday. We got the market being marked down, which we just saw. We saw that closing or trading in the lows of the test, what it actually looks like. So if we've got this big blue test here, the market's open, pushed down, and then brought back. And again, so if you wanted to see what's happening inside the low of a test bar, there's your answer. You've got this market marked down and then brought back, and then the rest, as they say, is history, as the market is then brought back. Seen the market attempting to move higher this morning as well. I wouldn't be surprised at all to see it move higher myself at the moment, because they're trying to keep the market on the highs, as they don't want the Ponzi scheme to end just yet. So I would expect this market to head back towards these 76%. And I'm just going to add a few more targets in there. So we've got the high down to yesterday's low now. That's where the next potential upside signal could be for this market. In the news, we've got 3 p.m. is the only time we're concerned with. This is after the market's opened, and that's the CB Consumer Confidence. This is released at 3 p.m. In the implied volatility, this moved higher yesterday, up to 12.24, which is quite odd given that the underlying markets moved higher, but I suspect it was most of the increase in the implied took effect as the market moved lower during the whole of the overnight and the pre-market session, so it's probably accounted for there. So just up slightly on the previous day there. Right, well, that's it from me. I will see you in tomorrow's edition of the Market View. Have a good day. As ever, thank you for your support and also for watching. See you in the next one.